Hey everyone, Greg from My Mortgage. Today just wanted to talk about why you might split your lending across different banks if you've got multiple properties. So it's really common that you buy your first home, maybe you've moved to your second home and you're with a bank, and then you might buy an investment property, or you keep your original home and then buy another property and keep that one as an investment property. And often people will do that with the same bank. Sometimes it's easy, obviously bank accounts will stay the same, all that sort of stuff. But there's sometimes some really good benefits to actually splitting across different banks. So the first benefit is going to be that there might be different policies at a different bank that might be more suited. So you might be able to get more lending. Potentially there's a way you want to structure your lending for a new property, for an investment property that might be different. Maybe they're doing a better interest rate or more cash contribution or something for different types of properties, and so that's where that's really beneficial. But the second thing that's actually more important is when you go to sell a property, if you have all of your lending with one bank, that bank can basically say what you do with the profit that you make. So say for example you have $500,000 worth of lending, both of your properties together are worth 1.5 million. You sell a property for $1 million. The bank could ask you to repay all of your debt that's associated with that. Now, if you still meet servicing requirements and all that sort of stuff, you can make it work that you don't have to pay it off, but it's a bit more of an effort to go through. Whereas if you've got that with a different bank, then you only need to pay off the lending associated with that property at that bank. So if you had $200,000 of debt left on your own home, on $1 million home, and you sold it, you would have $800,000 to do whatever you want with. That bank can't ask you to pay off debt that's at another bank. So it just gives you that flexibility to do what you want. Now you might choose to use those proceeds of sale to pay off other debt, totally fine, but we want you to have the option to do what you want when you want to do it. We've definitely seen this if you've got a business and you've got business debt with a bank. Maybe you sell off a property and the bank goes, hey, we're going to take some of those proceeds of sale to pay off some business debt because your situation has changed. And so if we can split that out, maybe you have your business banking over here in your own home, but then you have your investment property over here at another bank, then we can sell that investment property, you do what you want with the proceeds. Maybe it's a holiday home, we separate those out, things like that. So just something to consider. It's not necessarily right for everybody, and you don't have to, you can keep it all with a bank, but in terms of splitting banks, it's a really good option just to keep things separate and allow you to do what you want with funds when you make sales and things like that. So any questions around splitting banks and benefits, feel free to give us a call. I'd be more than happy to help out and make sure the structure is right for you.